You might have heard people say 1 crore rupees is sufficient for a person to have comfortable life in India based on the current living standards. Consider this. If you invest rupees 1 crore in a fixed deposit or a low risk bond with 6% yield, you will earn 50,000 per month in interest. In that sense, maybe 1 crore is sufficient to lead an average comfortable life. But what if we have 50 lakh in savings and need to earn 50,000 per month? Is that possible? Hello everyone, I'm Rs.50 and in this video, we'll answer the question, I have 50 lakh now and want to generate an income of 50 to 60,000 per month. Can you outline a plan on how to achieve that? Before we begin the video, please let us know if you would like to have a personalized investment plan based on your risk profile. Consider ET Money Genius. It's a membership program that helps you achieve your financial goals with the least amount of risk. More information can be found at the end of this video. Now let's get started. Goal of investing. Our goal here is to earn 50 to 60,000 a month, right? If it's a retirement investment, then the demand is not achievable because we cannot be reckless with our retirement funds. The most you can earn with your retirement corpus of rupees 50 lakh is somewhere around 7 to 7.5% via both government and corporate bonds, and if it's a long-term investment, then you can invest in equity expecting a 10% compounded yield. But for a retirement account, it must be well diversified and it is preferable to have low risk investment. So the most you can earn is around 8% a year, which accounts for 30 to 35,000 per month. On the other hand, if you are young and have years ahead, you can take risk and take risky bets such that you can earn 12 to 15% per annum to earn the required amount of 50 to 60,000 per month on your investments. How to invest? Considering the fact that you have time ahead and are willing to take risk, you can invest in direct equity, which must account for 70% of your investment, and the balance 30% in corporate bonds, yielding 7.5% interest per annum. The reason why we are diversifying is because you wish to earn steady income on your investment, right? We must also consider the risk factor. You can expect to earn at least 10,000 per month in steady income with the equity market is experiencing difficulty such as a crash. Here 30% of 50 lakh and the annual interest yield of 7.5% will come around 1.12 lakh. As far as equity investing is concerned, you can expect a 12% CAGR return on investment per year. That amounts to 35,000 per month in passive income. So your equity debt portfolio will earn at least 45,000 per month in passive income for a total investment of 50 lakh rupees. Also, if it's a direct equity or a mutual fund that pays dividends, then you can expect an additional income, that is dividend income of 0.5 to 1% with an annual dividend income of rupees 17.5 to 35,000. Where should I invest? As per the said investment plan, you must invest 70% of your entire corpus amounting to 35 lakh into equity and the balance 30% amounting to 15 lakh rupees in debt. When investing in a corporate bond, remember to check the credit rating of the company issuing the bond. Look for those with AA ratings and above rated bonds. Remember, when bond price declines, the interest on the bonds rises. So if you see a sudden rise in interest, then there has to be something wrong with the underlying asset, the bond. Invest in bonds that are secured by nature. If you wish to invest in bond funds instead of bonds, then these are some of the top bond fund you can check out. Number 1, Axis Corporate Debt Fund. Number 2, ICICI Prudential Corporate Bond Fund. Number 3, UTI Corporate Bond Fund. Number 4, HDFC Corporate Bond Fund. And number 5, Aditya Birla Sun Life Corporate Bond Fund. Unfortunately, for some reason, we are unable to buy corporate bonds directly from Zerodha Coin. If that opens up, it should be easy for us to all invest in corporate bonds. Until then, consider purchasing corporate bond funds, which is another type of mutual fund. And as far as equity investing is concerned, check out this video on equity linked savings scheme, where I have given some of the top ELSS funds to invest in order to earn over 12% return on investment. Check out the video, link in the description. Tax on investment. In case of tax on equity mutual funds, if your holding period is over 12 months, you are supposed to pay tax on your gains. That is, if your total profit is over rupees 1 lakh, then anything above 1 lakh in profit is taxable at 10%. The same rate is applicable to ELSS funds too. If it's a short-term gain, then you'll be taxed at 15%. And in case of debt fund, if your holding period is over 36 months, that is 3 years, then it is considered as long-term, and such gains are taxable at 20%. Again, 15% in case of short-term gains and 20% in case of long-term gains in regards to debt funds. Conclusion. It is very difficult to earn a return on investment over and above 15%. So instead of following riskier assets in hope of higher returns, I suggest you to give time to your investment and settle for a balanced portfolio, such as the one suggested, and earn return on investment of around 10 to 12% per annum. With that said, as per our investment strategy, we can earn 40 to 45,000 per month, or a total of 4.8 to 5.4 lakh per annum on our total investment of 50 lakh rupees. Also, since the investment returns we make are invested in the market, the returns tend to be volatile in the short run. Your only consistent income comes from your bond portfolio, which gives out interest amounting rupees 1.12 lakh and another rupees 17 to 35,000 in dividend income. And only when you hold the investments for long term, you can use the 4% FIRE principle to withdraw around 15,000 per month and still keep the portfolio intact for a longer period of time. To learn more about the 4% FIRE principle, watch this video. Link in the description. Now let's see what ET Money Genius is all about. Making money in the stock market isn't easy, right? That's when I realized that in order to earn better returns, instead of running behind top mutual funds, why not try ET Money Genius? ET Money Genius will understand your risk profile and suggest various mutual funds where you can invest. For instance, you can invest in a mix of index funds of large, mid-sized and even small cap companies. Why not try international equity, and even debt instruments and gold funds are offered. Basically, you get a very well diversified portfolio. Not only that, ET Money Genius will also make timely adjustments to your portfolio such that your portfolio returns are not affected by changes in the market. So what are the expected returns? Well, if you had invested as per ET Money Genius high growth mutual fund strategy for any 7 years in the last 15 years, you would have earned 16.1 CAGR returns. The way it ends here, because with no additional work, you can earn a wonderful return just by subscribing to ET Money Genius membership. Check the link in the description. Thank you for watching.